When will the crypto market cycle top? I have a deep dive here for us today, diving into the context of why you shouldn't even be trying to predict this and how to actually prepare for the top, going into the psychology of selling, the two mistakes that most people make, and how to avoid those so you can actually make profit this cycle. And then the 5 scenarios that I see playing out for this crypto peak, from being already topped, the classic cycle top, a Q4 or Q1 blow off top, an extended cycle, or a super cycle. I'll be diving deep into each of those scenarios so you're aware of them and know how to play them if they play out. Then real top signals, 9 top signals and indicators that are red flags that the top is in, so you can actually incorporate real data into your strategy and system so you're prepared in real time. Then the real cause of bear markets beyond sentiment, the real structural drivers that I could see causing this next bear market. Then rate cuts in context, why bullish cuts might actually be a trap of the cycle. Then altcoin scenarios, a simple winning strategy that has continued to work for altcoins that I'll continually be using to make money. And then also the bottom line, how to survive the peak and actually protect your gains this cycle. So got a very detailed presentation for us all today. A lot of very good stuff. This might be perhaps the most important video I've ever made, trying to answer this billion-dollar question of when will the crypto cycle top? So first, for context, I want to make this very clear. No one knows the exact top, and I do not live off predictions. I prepare for what the market is pricing in, and I play the trends. So price targets are just guesses at the end of the day, so I'm not going to be throwing out price targets in this video. And at the end of the day, I invest into the trends. When we're bullish, I'm going to be positioned. And when we start to flip neutral and bearish, I'll start to de-risk and, de-risk my portfolio. I play the trends, and that's the best way to play it, in my opinion. I don't try to predict and just sell at this imaginary price target that may never come. So a little bit of context there. Also, this is all just educational. This is all for educational purposes only. Read this as a disclaimer. So now to dive into a little bit more context before diving into the actual scenarios here is first the psychology of selling. Because if you don't understand this, then you're never actually going to be able to sell and make money in crypto. So first things first, before even diving into the deep psychology, is it's one thing to make money in crypto. In a bull run, making money is easy, but keeping money is the real game over the long term. And keeping money, managing risk over the long term, that is how you actually sustain the life-changing money you can make from crypto. So I want to dive a little bit deeper into that with diving into the psychology of selling, because specifically for altcoins, your money is not real until you sell, because just as fast as alts can go up, they can also crash and you could lose everything. So to dive into this, the number one mistake most investors make is losing sight for what they got into crypto originally for. So, is it to continuously gamble, your life savings, or is it to actually, build wealth, manage risk over the long term, and, have some freedom of your life, right? Or is it just to be addicted to screens? So don't lose sight of what you got into crypto for. And this is especially prevalent during the greed of a bull run that takes over your ability to make smart decisions. And this is the trap most people fall into. People get addicted to the rush of the volatility, right? Staying patient feels boring. Cashing out into fiat and selling feels boring, right? And what hooks most people is the thrill of thinking they can always make more. And that thrill and that mindset of I almost won is what keeps you addicted. And that's what most people are in it for. Not even to actually make money, not even for actual freedom. It's that they're addicted to this gambling mentality and this mindset and being addicted to the casino, which, newsflash, this might be a harsh reality for some of you guys. That's not where real success is made, right? So now I want to dive into going into actually selling, whether you sell too early or sell too late, because this is also a harsh reality you have to face, is that when you finally sell at the end of the cycle, assuming that you do, it is impossible that you will sell the exact top. You'll never sell the exact top, right? So you will either sell too early or sell too late, right? And the key is to understand what each scenario feels like. So in advance, you don't let your emotions dictate your decisions, right? because during the greed and the euphoria of a topping scenario, it's going to be hard to actually stick to a plan if you don't have one, right? So first things first, if you sell a little bit too early, you're going to have to make peace with this, right? You will watch price and crypto skyrocket past your exit, right? And that extra profit that you could have made will haunt you and will hurt more than anything because it feels like you lost money. Missing out hurts, right? And that pain usually creates the urge to FOMO back in to make up for what you missed. But if it's late in the cycle, you have to remind yourself that you sold at a good time and that you locked in a win. And that's all that matters, right? Take your profits and move on. And this is also another fallacy of continuously holding on and not taking profits because it could 10x again. You can't fall into fallacies like this. So knowing that you might sell too early, you have to make peace with that. But also if you sell a little bit too late, this is how most people round trip is if you hold on to your portfolio past all-time highs, you will end up selling with less capital than with what you once had. You will end up selling with less capital than you once had. So let's say, for example, you had a 150K portfolio at the peak, but then the market's down and let's say it's now at 120K. Your brain will tell you to hold until you see that 150K again, but that is exactly what's stopping you from actually selling and de-risking if it's a good decision, in the moment. So, it may never go back to that 150K again. And that pain of selling with less than your peak portfolio is how most never sell and end up round tripping all of their gains. And this is another fallacy I want to touch on. Also follow me on X if you haven't already, sharing a lot of good value on there. One of the biggest traps after the top is actually in is the fallacy of the next leg. Every dip just feels like another pullback before the next move higher, but that belief is also how you round trip all of your gains. And I'm not saying the top is in, just be aware of this fallacy because also on X, after the real top is in, everybody's just going to be saying, oh, it's just another dip. The next leg is coming. But be aware of that fallacy and that delusion people might be telling you. So, and this is also to all the people round tripping their gains or holding on to coins that you probably shouldn't be because you're waiting for them to go back to all-time highs. It's not a loss if you never sell, right? But sometimes you got to, open up the cabinet, take the pain, and then restructure to actually build over the long term. So the truth is that you'll never sell the exact top. It's not about being perfect. It's about protecting your gains and making rational decisions when emotions are running hot. Take partial profits on the way up. Know how to de-risk if one of your investments are getting invalidated. So take partial profits on the way up and know when to de-risk. So now that we covered the psychology of selling, let's go into actual scenarios for the crypto peak where you can actually apply some of that. So, and then after that, we'll be diving into actual top signals and real structural drivers of the cycle in the bear market that I see ahead. So scenario number one is that we already topped, which this is Bitcoin right now. The day I'm recording this is September 8th, 2025. So there is a scenario that we already topped. Bitcoin topped at 124K. Although I don't think this is very likely, bearish divergences are pointing towards this. So a bearish divergence is when RSI and volume is making lower highs. As you can see, last cycle top, RSI was making lower highs, volume was making lower highs, but price made a higher high. That's a classic bearish divergence. And then we had a bear market. Same thing we're seeing right now. Price has been making higher highs, volume's been making lower highs, RSI is making lower highs. That's a classic bearish divergence. I don't think this is the, best indicator ever, but it is something to respect. Also, this also works for bottoms of the bear market. Price was making lower lows, volume was making lower lows, and RSI was making higher lows. That's a classic bear, or this would be a bullish divergence, which also marked the bottom. So it seems like we are definitely late cycle according to this. A few things I want to touch on is possible U.S. liquidity tightening that could cause some problems. September also tends to be weak, so we'll see if we can really get through this and just mark this as a dip. Bitcoin could chop sideways or just trend lower, while ETH and select alts like Solana maintain relative strength. And if Bitcoin doesn't maintain strength and lead the next run, the top could be in, just to respect this scenario. Like I said, I don't think this is my base case, but it's something to note. This also dives into the fallacy of people endlessly waiting for the next leg higher, but it never comes. So this is a scenario to respect that I wanted to touch on. But now to a little bit more realistic scenarios that I could see playing out are probably from 2 to 4 here, these next 3 scenarios, which number 2 is the classic 4-year cycle peak, which would based on previous cycles would put us into peaking on October 22nd. This is just historically, usually cycle peaks, as you can see in this tweet right here, from all-time high to all-time high, from 2017 to 2021. Usually it's 1,064 days later is when the cycle peaks, which if you put that on this current cycle, that would put us peaking on October 22nd, 2025. So with this scenario, just going off the classic 4-year cycle, I would kind of disagree a little bit. I think there's institutions really driving this. I think you have to look at things like global liquidity, which I'll touch on in the indicator section here in a little bit. But this 4-year crypto cycle is a theory that has not been disproven yet. And you have to respect it, right? But, maybe this is just what plays out and it's really that simple. It's something to respect. It matches the seasonality from prior cycles. But, you also have to be aware if this is the scenario of people saying it's different this time, but history might just repeat. This is something to be aware of, the classic cycle top. But to provide a little bit more context to this, which also kind of flows into that classic cycle top, would be a top in Q4 of 2025. Maybe it's in October, or maybe it's into, Q1 of 2026. So with this scenario, a euphoric run into November, December, or Q1, driven by, the fiscal flows, the rate cuts that are on the horizon, and global liquidity being bullish, which we are seeing right now. Retail piles in, in Q4, chasing the vertical charts. That's when we get the euphoria. And that's when we get that mania phase of everything pumping, screenshots everywhere of crazy gains, mainstream media headlines. And these were a few scenarios that I extrapolated from previously in the cycle of maybe, Bitcoin chops a little bit more around that 109K, 110K region. And then maybe, into Q4 around the holidays is when we actually get that next leg up. Maybe around that 130, 140K Bitcoin. But like I said, price targets are just guesses. But that is something to note. These are just a few scenarios that I could see playing out if we just get one more leg of the bull run, and that's the top. That is a scenario to respect. And these are some of the charts that show this. So to keep this moving, these kind of overlap with each other. The classic 4-year cycle, also kind of overlaps with the Q4, Q1 blow off top. But I also really want to touch on this super cycle, this extended cycle narrative, because I think there's some truth in it. And there's definitely some data pointing towards an extended cycle into 2026. So I want to dive into that a little bit. So an extended cycle into 2026 driven by institutional flows, ETFs beyond the prior, year cycles, which that's a big thing. Obviously, this has been an institutional cycle. Maybe they could break that 4-year cycle and continue this longer. Also, catalysts like Jerome Powell being replaced by a dovish Fed chair in May 2026. That could extend the cycle if that plays out, in a dovish manner, and the markets like that. And the base case for this that I could see playing out is a rally into 2026. Maybe we get, a local top in December or Q1 of 2026 that kind of aligns with these scenarios. But then maybe we get a sharp sell-off like mid-year, like we kind of saw with that tariff sell-off. And then we get the final blow-off top at the end of 2026 when nobody's really expecting it, right? Because the markets do tend to catch people off guard and not just do what everybody's expecting, right? So that is a scenario that could play out. Rally into 2026, sharp sell-off mid-year, and then final high into the year end. So that is something I'll be aware of. Looks more like a secular bull phase than a traditional blow-off top, although that blow-off top could happen at the end of 2026. Driven by deep structural flows, the sovereign wealth funds, pension funds, corporate treasuries, treasury companies buying into crypto, etc. And the psychological trap to be aware of here is investors believe the cycle has no end, fueling the complacency or being caught off guard if we get another leg because you think the bear market's already here. So that is something to be aware of. This post also touches on this quite well. Pretty much just saying, to sum this up, is that it doesn't look like the cycle top is in yet. In fact, it looks like we're early cycle. When you look at things like this ratio of small caps relative to the larger caps, usually they pump late cycle and top, which we just haven't seen yet. Also, if you look at something like the ISM Purchasing Managers Index, this is a good gauge of the business cycle, which usually these 4-year cycles, as you can see. Last crypto peak was when we had this upturn in this peak, which we just haven't seen that leg up yet, which maybe, we see that into 2026, and that's when we actually peak. So there's a case to be made there that the business cycle has still not peaked yet, which could lead to more of an extended cycle. So that is something to be aware of. To keep this moving, the super cycle narrative, I don't like to buy into the super cycle hype that kind of shows up every single cycle. But within this super cycle narrative, I think a more reasonable thing is these mini cycles, right? This tweet really wraps this up really good. Bitcoin is a macro asset. It moves in conjunction with the risk on in US equities. Institutional flows reduce the volatility. Based on that, I find it very unlikely that Bitcoin ever sees another 70% correction. Maybe it's going to be more like a 30 to 50% correction. And assets outside of Bitcoin, when they are risk on, will go into mini bear markets in these mini cycles, right? So shorter bear markets, but also shorter rallies, and we don't get the super extremes of, the normal 4-year cycle, which is an idea that you definitely have to respect. Calling for cycle tops is murky business when in fact we have many risk on cycles. And the only time for an actual bear market would be if a recession hits or a meaningful drawdown of US equities, which, could be good or could be real in a realistic scenario playing out. Maybe Bitcoin and crypto is just moving with equities and just kind of goes up into the right over time instead of these harsh cycles. So he also says there's no signs of a real recession unless the Fed, flips or we get crazy inflation data. The key is to play these mini cycles while doing a rinse and repeat, offense and defense, but not expecting a prolonged bear market. Could be wrong, but that's the framework that this guy is operating on. So there's definitely some truth in this, but we'll have to see if that's a theory that, takes over from this 4-year cycle theory. So yeah, tops become less parabolic and just more extended over time. Risk is people mistake every dip for a continuation, making it impossible to divine a top in real time. Would change the structure of crypto permanently, similar to how equities in longer term, trades go up and to the right, not so much boom and bust in the short term. But I would say the trap is you fall into the infinite upside thinking that, things can never go down, which crypto will have dips, or 30 to 50% corrections, even if we get, these mini cycles. So that is something to be aware of. So that about wraps it up for the scenarios that I see playing out. I could make a whole video on each one of these, but I think it's important to be aware of each, and depending on how things play out, whichever one plays out, trade the charts in front of you and, play what the market is giving you, etc. So now I want to dive into the real top signals where you can actually understand when we are topping in real time. So these 9 indicators will give you the context and show you when there are extremes in sentiment, in euphoria, and when the overall market environment is risk on and at a risk on extreme. So these are great at showing you where we are in the cycle. But remember, markets can stay extremes for much longer than most people expect. So just because sentiment is at an extreme doesn't mean the peak is always in right away. So obviously this is like the classic, 4-year cycle you can see right here, which what these indicators are going to help you do is try to capture, when we are at this topping phase. And it might not be the exact top, but somewhere in this vicinity, right? So that's for a little bit of context there. Number one, and also some of these, I want to dive into indicators I really don't hear people talking about. Like number one is the Bitcoin ETF inflows and outflows, and specifically the divergences between these. So like I mentioned about the divergences of RSI and volume, as you can see, the previous local tops for Bitcoin, also this is the site if you want to check this out on yourself. Also the period would be 30 days. That's my ideal period for looking at these. So this green line in the background, as you can see, like during the 2024, 2025 top when Trump launched his meme coin and when Trump got elected, the ETF flows were making a lower high, price was making a higher high and grinding higher. That's a bearish divergence. Same for that April bottom, that April tariff bottom, right? Bitcoin's price was making a lower low, ETF flows were making a higher low, follow the institutional money, and that was actually the bottom, and we continued higher. Even that local high at 124K, when Bitcoin swept 124K, ETF flows were falling, price was rallying, followed the institutional money, we actually ended up falling, right? Which we could be even seeing right now at the time of recording this. ETF flows are grinding higher, price was kind of grinding lower. The bottom could be in, or at least local bottom, which could lead to the next leg up. So definitely watching these and divergences with ETF flows and institutional flows. Number two is velo data, specifically funding rates and liquidations. Shows when trading and positioning, and really a good gauge of sentiment when people are over leveraged longs, which are often at cycle peaks, or over leveraged shorts at cycle bottoms. So this is what funding rates look like. It's this right here. Whenever we get these spikes, like as you can see right here, that was a top, right here, that was a top. We haven't really seen that recently, but also bottoms, as you can see, funding spiked down heavily. That was the bottom of the bear market. So a good thing to note also when we get spikes like long liquidations here, that was a bottom, or even right here, a bunch of liquidations at this bottom. So also when we get huge liquidations, that also could mark a bottom, as a forced seller would always be the last seller of resort once we eventually hit a bottom, right? Same at the top. That's what liquidations show you. And funding rates can also show you when people are over leveraged in either ways and reaching an extreme. So that is something to mention. Already touched on this, so rewind back in the video if you have to. The RSI and volume bearish divergences when price is making new highs, but RSI and volume are trending lower. Classic exhaustion signal before the reversals, as you can see in previous bear markets. So already touched on that. Now stablecoin dominance, a key level at 5%. This measures the share of crypto market cap in stable coins, so playing it safe, right? So at peaks, this is usually when we bottom. This was the bottom of the bear market. This is when scared money is flowing out of crypto and into, safe stable coins. And then also, this has been the bull run when stablecoin money is flowing into crypto, into risk on assets, which usually the peaks in crypto happen around this 5% level, to definitely be aware for. So once we do hit that level again, that will be a signal to sell and, look at these other indicators in conjunction. But this has usually been a pretty good sell signal for local tops. And maybe even we go lower, which would also be, a signal to sell. So that is something to definitely be looking for. Let's keep this moving. 5, the altcoin season index. This tracks outperformance of alts against Bitcoin, which usually, the blow off top blow off tops in last stages of euphoria, usually end with altcoins going crazy in the classic altcoin season. So if we do end up in a peak like this, like we saw during, late 2024 and eventually when Trump launched his meme coin, that was a mania phase, right? Which is usually a good selling opportunity. So this is something I'll be watching to keep this moving. Number 6, Google Trends. This really shows you retail investors' interest and just interest into crypto in general, right? So whenever we get huge spikes of interest, as you can see right here, we got a huge spike of interest last cycle top, which usually, when interest is maxed out and peaking, that's usually also when, the market cycle is also peaking. It was also interesting. We saw a divergence here. Price made a higher high, divergence made a lower high, showing, interest was kind of dying off, momentum was dying off. Then we had a bear market. We've seen a few peaks of this right here. Who knows if this is the cycle top peak, but, if we do head into these upper thresholds of crypto mania, that's usually a good sell signal to be watching for and just to gauge interest of, Bitcoin, crypto, whatever altcoins, etc. So that is something I'm always watching too. The Coinbase App Store ranking, usually whenever, in previous cycles, Coinbase hits number 1 on the App Store, that's a, cycle top signal. What I will say about this is it doesn't even have to be Coinbase. If something like Phantom Wallet or Moonshot or whatever crypto app is number 1 on the App Store, that's a signal that retail is here and could be a top signal. This is a good X account that posts updates every day of where Coinbase is on the App Store. So check that out if you want to stay up to date with that. Then these two are both dashboards and a bunch of indicators into a table. So CoinGlass has one of 30 bull market peak indicators, which currently 0 out of 30 are hit, which, to be honest, I'm not a big fan of this. It seems like all of this is really reliant on that 4-year cycle. And a lot of these are sentiment indicators. And it feels like whenever we are going to peak, this isn't going to be fully in sell mode. And this definitely doesn't gauge local tops, it seems. A lot of this is on-chain data. So I have my skepticism about this. But if this is, pointing towards sell, it's probably a good time to sell. So this is something to check out too. What I do like even better is Project 10X on Substack. They have a dashboard that tracks 30 top signals. These are all the signals right here based on like Jedi, the best sell signals, Normie, solid sell signals, or Pleb, obvious sell signals, which is a paid Substack by a good friend of mine, Philip. Posts some really good newsletters on there and pretty affordable price. So shout out to Philip, a lot of good stuff in here. And pretty much how this works is every single week he'll update it, showing green are, not sell signals, red are sell signals, and then yellow means it's starting to heat up, but not a sell signal yet. And he goes through all these indicators every week to see, like previous cycle tops, as you can see here. We had a bunch of red sell signals, which ended up marking the tops, right? Which we just haven't seen that yet this cycle. So this is pointing towards, the top not being in yet. But we have slowly see it heat up in points. And also, like, this wasn't fully red like we've seen in cycle tops. But during a time like this, we were getting quite a few red dots, which ended up being local tops, which is also good to kind of gauge. So that is something I wanted to mention too. So that covers, the indicators I use to kind of gauge when we are in that topping range. But what I think is even more powerful beyond just the sentiment gauges is, what are the signals that could actually flip the cycle, and what are the events that actually drive bear markets, which that's what I want to dive into this next section is, what's going to cause this actual downturn? What are the catalysts? What are, actually going to drive this section of the cycle, the downturn, the bear market, which I really want to dive deep into this. So sentiment obviously always plays a role, and, tops often coincide with extremes where retail and institutions have been fully piled in and there's no more money left to come in, right? There's no more buyers coming in, so that's eventually when we obviously top, right? And you know it when, your cousins, your uncles, your family members are talking about Dogecoin, when you're taking screenshots of your portfolio every day, when you feel the urge to just buy things because you're up so much money. And these moments of euphoria are powerful in markets because that shows you when, we're at an extreme and the market has nothing left to climb. But the real drivers of bear markets go beyond just sentiment. They're rooted in macro factors. And specifically, if you get anything from this video, the true shift happens when markets begin pricing in a slowdown of growth and liquidity. Bear markets happen when the market begins to price in a slowdown of growth and liquidity. And that's when the macro environment flips risk off. And we've seen this. Sometimes the real event that causes that is a big policy shock. Like last cycle was the policy shock from the Fed flipping hawkish and launching quantitative tightening, which was a huge headwind for liquidity, sucking, trillions of dollars out of the economy and markets, which, it took time for that to actually play out. In fact, we're still seeing quantitative tightening, but the market priced that in, which we had a huge sell-off, and that was the beginning of the bear market. We've also had huge events in crypto specifically, like the ICO crackdown in 2018. That was a shock. That was a policy shock. So usually big events like that also coincide with a peak. Other times, it shows up in a divergence when the economy and liquidity are rolling over and risk assets keep climbing higher, and that disconnect is not sustainable and usually resolves in a cycle peak and assets rolling over. And global liquidity is a key driver. Really, if I could only watch one indicator out of all these indicators, it's hard to just say one, but global liquidity is key. This is my global liquidity indicator in orange right here. I made a custom version of the cross-border capitals indicator. This is still not public just yet, but follow me on X. I might be releasing this pretty soon, which, as you can see, global liquidity, falling. That was a big reason of the bear market too, and the Fed announcing QT, which I think was around this time period right here, which liquidity was still rising, but the market started to price in, since markets are forward-looking, this downturn of liquidity, which we ended up happening, and we had a bear market, right? Which this cycle, liquidity has been up and to the right and still rising, which shows that, the market cycle still has some room to run as long as this continues higher. But if this starts to roll over and the markets are still trending higher, that's a caution signal to maybe also take some profits. This is also a global economy index indicator showing you, when the global economy is slowing down, which even last cycle we had a divergence. The economy was slowing, but price continued higher. That was a divergence, which if you listen to the divergence of what the economy is actually doing, you would have realized that there was a downturn coming. Also, when there's extremes, like as we saw right here, that was an extreme and topping period for crypto. We haven't seen the extreme just yet. In fact, we saw an extreme bottom during the tariff bottom, which was a good buying opportunity. So this global economy index is a very good indicator. And if this were to start rolling over, I would definitely respect that signal. But right now, it's chugging along higher, and we'll see how this plays out. But like I said, follow me on X to see if I ever release these indicators, etc. This is also the classic global liquidity cycle that I should have touched on a little bit earlier. Usually it happens in 5 to 6 year cycles. As you can see, this orange dotted line, which this is projecting, and Michael Howell, a big global liquidity guy, is projecting a peak somewhere in early 2026. That could also coincide with the crypto cycle peak in 2026. So that is something to be on the lookout for. I'm always watching liquidity, so it's very, very important. Going back to this, where was I? A few other things I want to touch on. So a big point I made is when the market starts pricing in the slowdown of growth and liquidity, that's when the market and macro environment, flips risk off. And we have a whole entire model with our quant systems built around this specifically. When our model flips risk off by gauging a lot of macro assets and really the economy, a bunch of global assets. When Global asset markets are starting to price in a risk-off environment, aka that slowdown in growth. That's exactly what one of our core quant systems does. This is our macro model. Red is risk off, green is risk on, which, as you can see, green, we've had our bull markets of pro-growth environments of what the market is pricing in, and then red is risk off. And that's really what drives bear markets. And this is the core model I'm going to be using when it comes to gauging macro and positioning for the macro bull runs in bull markets. And that's exactly how we've also would have sidestepped that 2008 recession, because, our model was pricing in and showing us that the market ultimately was pricing in a risk-off environment, aka the slowdown in growth, which this is also back test for this model. As you can see, it's clearly outperformed Bitcoin if we were just to use this to, manage risk when it comes to Bitcoin. So that's worked quite well. To get back to this topic, though, of events that also usually end the crypto market cycle, is an observation that I've come across is usually there's a big dilution catalyst, right? This is like the flood of NFTs last cycle, or the meme coin mania this cycle even, right? There comes a point where there's no new demand coming in, and instead of demand growing, it gets diluted, right? So instead of demand growing, there's a catalyst like NFTs, meme coins, whatever it is, that just dilutes that demand across the market, right? Which that eventually ends to, the market rolling over. We saw that with the Trump meme coin. That was like a huge liquidity dilution event. Everything went into the Trump meme coin, and then when that crashed, that just, nuked the whole market. So it was nuking the market because it was sucking in this liquidity, and then it nuked the market when it crashed. And that was like a huge dilution catalyst in a sense too. So that is something to also be aware of. What is that dilution catalyst? Is it going to be a bunch of, new coins being launched that just dilute everything, or NFTs or whatever it is, right? So also, I think a big headline that could be the clear topping headline this cycle could be something like the government buying Bitcoin, the US government buying Bitcoin, which would represent, the last big buyer, or, that headline is so big, there's not even more euphoric headlines that could come after that, right? And those kind of events could lead, the exclamation points on the end of the cycle, which is what you want to be aware of. So I went on a little bit of a tangent there, but this is all stuff to also be aware of. And, the real cause of bear markets and the starts of bear markets that you need to be aware of. So that's that. Now I want to wrap this up a little bit on rate cuts, altcoins, and then the bottom line. So when it comes to rate cuts, this video is already going on a little bit too long. So what I will say about rate cuts is I'll make a whole nother video dedicated on this, because rate cuts in the past have led to recessions, but has also led to altcoins exploding in previous cycles. So I'm going to make a whole nother deep dive on that, as rate cuts are pretty much confirmed on that September 17th meeting. But I want to dive into a little bit more strategy when it comes to altcoins specifically. We have seen Bitcoin dominance really start to fall and kind of stay down, which, if this really falls lower too, kind of goes into that altcoin season index. When alts are going crazy, that's also usually how cycles end in crypto. So this is something I'll be watching. But Ben Cohen has been pretty spot on this crypto cycle. And his thesis is that Bitcoin dominance is going to start rallying again and find a high in September and October. And then after that, we finally get, that end off, blow off top rally, which I don't have his other chart here, but he projects a cycle top somewhere in Q4 this year based on that 4-year cycle narrative, which is something to be aware of. So I could see something like this playing out, but Bitcoin dominance seems like it doesn't just fall as aggressively like it has last, or at least in previous cycles, especially since this is kind of an institutional cycle, and the institutions aren't buying your shit coins. They've been buying Bitcoin, Ethereum. It looks like they might be buying Solana here pretty soon, or at least treasury companies. So be careful with this. And really, the strategy I want to leave you off with that has worked very well for me when it comes to, alts, is it's been a rotation game this cycle. And it's been about being selective and riding the outperformers. And that's been the winning strategy, right? Not just holding a bunch of random altcoins, which most are just underperforming Bitcoin or Ethereum, right? That's how you just get wrecked. And also fall into the fallacies of just holding on to losers and waiting for them to go back to all-time highs, which most may never, right? So I really like this tweet from Pentoshi too. He's been pretty spot on about this rotation game this cycle. The past 3 months have been free money and then more free money nonstop. For example, ETH at 2.4K, ENA, SOL, and even pump buybacks. In each case, we're told around the lows, and then we're just free rides if you just didn't overthink it and just played the rotation game into the buyback tokens, into ETH, into SOL, etc. So yeah, that's what I want to leave off with altcoin strategy specifically, because a lot of this stuff is also specifically for altcoins. Being able to take profits, sell near the top. Like I said, you'll never be able to sell the exact top, but not falling into these fallacies that most people fall into. And it first starts with becoming aware of this stuff, of growing your skill set, of learning more, and then actually applying, that knowledge. So the bottom line of this all, to wrap this up, is no single scenario is guaranteed. Hope for the best, prepare for the worst, stay objective. Don't just listen to all the moon boys on X. Stay aware of all of these scenarios. So if you like this content, it would mean a lot. I put a lot into this presentation. To like this video, share it, subscribe. Also, I'll be posting more stuff on X, on Instagram, which in the description below, I'll link all those links. And don't try to predict the future. Prepare for what the market is pricing into the future. And that's exactly what we do with our quant systems. The link to all this, if you want to learn more about how I actually invest based on our 2 quantitative models, our 1 macro model that I mentioned in this video, and then also our core trend signal for crypto assets that also work for traditional markets, and really, growing the foundation to build your portfolio and all this stuff. So if you want to learn more about all this, you could DM me the word system on Instagram, reach out to me on Instagram. That's the best way to contact me. But that about covers it. A lot of good stuff. I can't wait to look back at this in a few years, maybe in a few months if the crypto cycle has topped, or whenever we eventually do. And that's it for today. Much love, everybody, and peace.